I'm filming this from a cafe in Kosovo, and while I sit here, my net worth is growing. Right now, while I drink this nice coffee, I'm making money. And full disclosure, I haven't had a 9 to 5 in a long time. People always ask me, how do you afford your travels? The answer isn't a side hustle, it's not crypto, it's not dropshipping, it's something far more boring and far more powerful. Today I'm going to show you exactly how my money works so I don't have to. There's one principle that drives everything I do financially, and it comes from an old fable. Don't kill the goose, leave off the eggs. Most people, when they have money, spend the goose. A new car, a bigger apartment, a lifestyle upgrade, and then the goose is gone. I decided early on, the goose is my capital. The eggs are the passive income it produces. I live off the eggs, and I never ever touch the goose unless I absolutely have to. That one mindset shift changes everything, because when your money is working harder than you are, you don't have to work as hard, and time, not money, is our biggest asset. So, how do I structure this? I use what I call my 5-bucket system. Think of it as the 5 jobs my money has, each with a different role. I put every penny to work. So, as you can see, each bucket has a specific role: growth, income, protection, or liquidity. Combined, they create my resilient financial machine. Bucket 1, the stock market, 45% of my portfolio, index funds and ETFs mostly, low fees, broad diversification, and historically about 7-10% annual returns over the long run. I don't pick stocks, I own the whole market. I'm not trying to be clever, I'm trying to be consistent. I never sell my principal, I only withdraw 4% of the dividends. Bucket 2, real estate, another 45%, my rental property back home. This is my most tangible asset, something I can see, touch, and rent out. It generates monthly income regardless of what markets are doing. It also appreciates over time. It's the most boring investment I have, and one of the most powerful. Bucket 3, the yield shield, 5%. This is my buffer against bad years. Bonds, dividend-paying stocks, assets that generate income even when the market is flat or falling. When the stock market drops 20%, I don't panic sell my index funds. I tap the yield shield instead. Bucket 4, emergency fund, 4%. This sits in a high-yield savings account. It's boring, it's liquid, it's there for the unexpected. Medical bills, a broken laptop, a missed flight. I don't invest this, I just protect it. Bucket 5, cash cushion, 1%. This is my spending float, day-to-day expenses, short-term travel costs. A tiny bucket, but it means I never have to liquidate anything, just to pay for groceries. Here's the question I always get: what if the market crashes? What happened in 2020? What about 2022? This is exactly why I built the system the way I did. When the stock market is down, I don't sell equities. I don't lock in losses. Instead, I shift to plan B. I sell bonds from my yield shield. I lean on the cash cushion, and the rental income keeps floating regardless. Most down years, that combination is more than enough. But if it's a prolonged crash, a 2008 style event lasting multiple years, I have a plan C. I pick up a remote part-time job, and if I need to stretch the money further, I move to a cheaper country where $1,500 a month can cover a genuinely comfortable life. That's not failure, that's optionality. Having a plan C means we never have to panic. Plus, if I have spare money to invest, I buy more stocks because I love a good bargain and I hate to let a good crisis go to waste. Here's the backbone of my withdrawal strategy, and it comes from decades of financial research. The 4% rule says if you withdraw no more than 4% of your portfolio per year, historically, your money outlasts you. Your investments keep growing faster than you are spending them down. So when the market is up, I withdraw 4% of my capital gains, nothing more, and combine that with my rental income. That's my annual budget. I don't touch the principal, I don't touch the goods. It sounds simple, it kind of is. The hard part is having the discipline to live within it and the portfolio size to make it work. We'll talk about that in a second. Is it boring? Yes, I have a confession to make. I am a certified boring investor. I think you should embrace boredom too if you want long-term results. So people assume that to travel full-time you need to be rich. I'd push back on that. The real unlock is living intentionally below your means and redefining what means looks like. I don't have a car, I don't have a mortgage, and I don't have a wardrobe full of things I don't use. What I have is time, lots of it. Time for my partner, to exercise and travel. I'm a passive investor because I'm too busy living my life. Every expense you cut is capital you redirect into the portfolio. Every dollar in the portfolio is an egg that the goose eventually lays. It compounds, it snowballs, it quietly, slowly builds freedom until one day you realize you don't have to go back, you are free. So, let me give you the summary because I want this to stick. 1. Build a portfolio with multiple income streams, not one. Stocks, real estate, bonds, cash, each one plays a different role in different conditions. 2. Use the 4% rule as your North Star. Never spend more than your portfolio can regenerate. The goose stays alive, eat the eggs. 3. Have a layered backup plan. Market down, use bonds. Crash lasting years, remote work. Cheaper geography. Having options means zero panic. And the biggest one, time is the asset. Not the watch, not the car, not the square footage. Every financial decision I make, I ask, does this buy me more time or does it cost me time? That reframe changes everything. I don't live to impress, I live to express life. And if you are at the beginning of the journey, maybe you are still saving your first 10k, or you are trying to figure out index funds, drop a comment and tell me where you are at. I read everyone and I'm building future videos around your actual questions. If this video was useful, share it with one person who needs to hear it, not for the algorithm, just because this stuff generally changed my life and it might change theirs too. I'll see you in the next one, probably from somewhere you've never been.